All right, Counter Range Theory Trader coming at you with a video on daily bias and using the Counter Range Theory to get your daily bias. So let's not waste time and get right into it. In order to get a daily bias on the Candle Range Theory, it's very, very simple. You're just going to go to the daily chart of any instrument. This works in anything, doesn't matter if it's futures, forex, stocks, crypto, etc. And you're going to look at the color of the prior daily candle. Okay, and if it's red, your daily bias is going to be long or bullish. And if the daily candle, the prior daily candle is green, you are thinking short or bearish. All right. Now, why is that? Here's how most traders see the market. They look at the market as they want to identify trend. Okay. And I'm not necessarily big on trading trend. I am a range trader. Okay. Counter range theory traders trade ranges. Okay. Not trends. So in order to have a good short trend, what they're looking for is just lower highs, higher lows. Okay. Like that. That's what the trend trader is looking for. A continuation of the prior day's action. Okay. So this low, this low, this low. Okay. Like that. That's what they're looking for. Same thing for regular traders on this end. When the day closes, they want to see price do this. And they're trying to catch these little retracements, and they think price is just going to keep going up and up and up forever, and think that they think price is going to go down, down, down forever. And that's fine. Sometimes it does. But what if it doesn't? Let's take a look at how we view the market now as counter range theory traders. So here's what the counter range theory trader is looking for. Step number one, though, is this. And with the system I'm going to go over, if it seems unfamiliar to you, you need to take a look at the video entitled "Retire Early using the 15-minute chart." That'll explain in more detail what I'm going to go over in this video. But everything I talk about with your trading model is going to tie into that. So I go into more greater detail over there. Okay, so if we have a short bias, okay, a short bias, and actually let me flip these. I'm going to put this here and this here. All right, so why am I long? What do I need to see in order to go long? What I need to see is price on the next day. So if this is Tuesday, on Wednesday, I'm looking for price to go below, to start trapping those continuation traders, and then do this because my bias is long. In essence, I'm looking for either a retrace or a complete erasure, if that's a word, of the prior day's price action. All right. If I am short, okay, I need to see price go above the prior day high, trap all those continuation traders, and take them out. Okay, and everybody who went long this day is toast. That's what I need to see. Okay, so this is that's your daily bias in a nutshell. If the prior day's candle, remember daily range only, is red, you are long for the next day. So Tuesday's candle is red, Wednesday's price action, you are looking for this. If if Wednesday's price action is green, Thursday you're looking for red. All right. But how does this look on a real chart? Let's see, and then I'll go through some examples and drop down. Okay, so I'm going to get rid of all of this, and let's take a look at. I'll just pick a pair at random. We'll just say this one. Okay, so dollar CAD. Here we go. All right. So how does this look in real time? Right here. And actually, let me do this. I'm going to hide that. Okay, so for this most recent week, you'll notice that this is Friday, Thursday, Wednesday, Tuesday, and Monday. All right, so if I'm green right here, remember that my bias is what? If I'm green, I'm the opposite. I'm looking for a short. What did price do right here? It went down. Okay, now obviously you can be long here, but at the end of the day, obviously this kept going down, down, down. And anyone who went long here got toasted. I understand that. So the best trade for this week was right here. Okay, was right here. And I like to do this on a weekly basis. And then next week, of course, I would still be long. But in order to take the long for next week, I would need to see price go below this low and then come back up. All right. But this is what we're looking for. Let me find a little bit of a better example though, which is right here. Right here. See this red candle? We'll do a replay here. All right. Here's an ideal range between these 2 days. So this is Monday's candle and it's red. So what is my bias according to what I just described to you? Long. I'm only looking at the prior low of the day. And I want to see price go below it, ideally between the hours of 2 and 5 a.m. Eastern Standard Time, the London session. So let's take a look and see what happened. Now, can it go through the USA session? Yes, but I'd say by 11 o'clock, I'm done. I don't look for the candle range to play out after 11. Now, there may have been some news on this day based on these spikes. Let me see. Yeah, this was 8:30, so I promise this was probably news. But at the end of the day, the bias did play out. Okay, because we see this black line right here is the prior day low, and price did come up off of that. So in a perfect world, if you got in, say right here, let me see here. Yeah, right about there. Let's say we do a 15 pip stop loss. The news may have taken you out, but let's just say you do a 20 pip stop loss. I don't trade news, so nor do I recommend it. I recommend waiting until the news is done before you get into the market. But a 20 pip stop loss and a 40 pip take profit for 1 to 2, which was right here. Okay, all right. So again, daily bias long based on the color of the prior day's candle. Let's say we took an entry around 545. If we let it play out a little further, okay, we see that there you go. Price you would have got your 1 to 2 in London. All right, it did hit the next day on Wednesday. So you enter on Tuesday, Wednesday it would have hit, slight continuation, done deal. That's it. That's how it looks in real time. Okay, so we'll get out of here and reset this. Let's find one more example before we go to another one. Here's back on the daily chart. Okay, and let me exit this. And I'll find one more example of a good range before we move on. Just in this pair. So let's see. Go back a little bit. Okay. And remember, it has to sweep the prior day's low or high. If it doesn't do that, there's no trade. Let's see here. Yeah, here's one right here. All right. So that was a long example I played before. Here's a short example right here. Candle is green. So my bias, this was Monday's candle. So my next day is Tuesday. This Tuesday is when I'd be short. So let's do the drill down. See how this looks on the 15-minute chart. Okay, now this is when that was played. And sometimes in the dollar pairs, you will see the moves come in US. Okay, so again, what do we look for? Price to go above the prior day's high. And actually, to make this easier, let me put market levels back on here. There we go. Okay, PDH, prior day high. Remember, again, if you're unsure of these terms, look at the links in the description. You'll see the trading system that goes over this in greater detail about trading the 15-minute chart. But here's our money candle right here that created the high of the day by 11 o'clock. And then the close below the money candle was right here. There was a retrace, and then it went down again. So basic M pattern. As long as the high of the day holds, the trade is valid. So our ideal entry would have been anywhere in here. So let's just say for the sake of this discussion, we got in like here at 12:15. Even though, like I said, I'm, you know when to break the rules. I'm typically done by 11 o'clock, but at the same time, this is one of those special occasions where, hey, So that would have been about a 43 stop loss. So we want to go for about 80. Was that 86 pip take profit? Always just go for 1 to 2, and it would have hit. So that's not, you see it very plainly here. But again, it all starts with having a daily bias and sticking to it, not changing it. Okay, but again, you have to wait for the price to go above the prior day high if you're short, and below the prior day low if you're long. So with this one here, it played out a little later than I like to see, but this strong move up was an indication that price was likely going to come back down. Okay, and it did end right around where it started at the daily open, because you see it was just a doji candle. It's a spinning top when the day did end right here. So what I just showed you, the 15-minute chart I just showed you, is this candle right here, where price really didn't move at all. It spiked up and spiked down, but our daily bias came from the fact that this prior day's candle was green. Now, in terms of losing trades, how do you stay out of losing trades, or minimize your downside? The thing is this, because sometimes, and a lot of times actually, your bias is not going to play out. Let's remove these drawings. So say for instance with this range right here, and let's go back to it and take a look. Okay, so you have price above the prior day high. Okay, well, CRT, can I go short here? Well, let's take a look at the chart and see. Let's take a look at the timings. So price did start below, or start above the prior day high right here, and it did give you a little bit here, and you may have gotten some action here. So going for 1 to 2 may have saved you, but if you're trying to hold it overnight, as you can see, that didn't really work out. So you have a money candle here. That created the initial high of the day. So you could have gotten a little bit of price action here. You could have got about 30 pips out of that. That's fine. But if you go for more, obviously it did not work out, because this right here, typically it's a counter trend trade. So you just have to be careful with that. Okay, you have to be careful with that. Now, in terms of another pair, let's say you try to counter a strong trend where you got your bearish, but price just like 2 greens in a row. Here we go. This is a good one right here. Right here. Yeah, let's try this one. Okay. And let's see, this is Monday to Tuesday. All right, so remember, if we are short, we need price to go above the high, then close below it. Now, price did do that here, but as you can see, anyone who went short here got stopped out. And what kept us out of this trade here? Ideally, it's the money candle, meaning this. This right here was the high of London. Did price ever really close below this candle right here in a satisfactory manner, like a real strong close? Not really. This extended consolidation above the high was trapping shorts, and then they just killed them all by spiking the price up. Okay, so this one right here, if price does not close below the money candle in a decidedly, like a real strong manner, if it's a little weak close, just be careful with that. This would have been the ideal money candle right here initially to make you think, okay, this is an M, leg 1 and leg 2. But see, this close here is real weak, and it spikes right back up. And the only thing to be concerned about, now you can take this trade, but you have to be cognizant of the fact that you can get stopped out when price starts to poke at this high right here. This right here was the clue to let you know, hey, look, we're about to go up some more. Okay, price, you're always looking for a straight drop, some consolidation, but these strong candles here, and here let you know, hey, look, it's not likely to go back down. And as well, remember I said by about 5 o'clock is the best time for a pair to start to reverse. Instead of reversing, it's just consolidating and chopping around. This is the clue to let you know, hey, look, this is not going to go down. It's going to keep going up, and which is what it did, right? Okay, so this right here is your clue that it did not behave in the way that you like to see in the time that you like to see it. Okay. So if it's consolidating and not doing much for like an hour, hour or two, just get out, save your equity, take another trade. Okay. So let's go to another pair now. So keep this image in your mind here. And let's take a look at how a short trade is supposed to look. All right. On a different pair though. So let's go back to our daily. And let's try GCAD. I'm just picking one at random here. And let's do this one here. All right, so this is Tuesday to Wednesday. I'll pick this bar here. Okay, all right. Now see, here's the range right here, okay, green. And see this wick here? This price went above the prior day high and pretty much undid everything that happened the day before. Perfect. So let's see how it looks now. How did it behave? And what times did it do what it did? Okay. So this one here actually gave you two chances to get in. It gave you a decent money candle here. Right here. See how strong this close is below the money candle right there? Okay, because here's your initial money candle right here, the initial high of the day right here in London. Strong closes below it. Boom, and then boom. It kept right on going, right? So you had two chances to take this trade. One in London. Here. Stop loss would have been above the high of the day. So that's about 23 pip. Let's say 25 pip stop loss. So obviously you tried to aim for 50. That did pay out, no problem. This may have been news driven, I'm not sure though. Might have been some news on the pound because CAD doesn't typically have news until 8:30. That probably came around here. Yeah, this was probably news driven, I'm thinking. Maybe 8:30, 9:30 with dollar. But either way, the point is this. This could have been an ideal trade here, and then you got another chance at another high of the day here, close below it right here. And look at that. This could have been a 100 pip day on two trades. Now, this is not normal, though. Typically, you won't see moves like this every day. I promise you that. All right, but you had two chances to get in. One for the London traders right here on the close below the initial money candle, and a close below this money candle here in the USA session right at about 11 o'clock. All right, but again, it came from the daily bias. Okay, daily bias of a green candle. So ergo, I'm looking for shorts. Okay, and then after I see price go above the high, okay, I'm only trading above the high, and then it closed below the money candle. That's all we saw right here. So that's why we wanted to hop in that trade. So let's find one more long example, and we'll call this video done. So let's see, we just did pound CAD. Let's try dollar yen. And let's see. And you may see some ranges on your own here as I go through these, but I'm just trying to find a long example for us here. So we're looking for red candles. And I believe I see one. But I want another one. Let's see. Well, no, that's still a little too far back. Okay, we'll do this one. All right, so we have red candle right here, Thursday. Bias is long. What must I see? Price go below the low. Okay, below the low, which it does right here. So let's drop down. And how did price behave? And when did it do what it did? Now, this was a tricky one because the thing is, this one didn't go below the low until it's a little bit outside of our trading window. Now, you don't have to sit at the charts all day. You can set price alerts on this. Not my best setup, only because it didn't take place until about 12 p.m. So that's outside of I don't like trading after 11. I really don't. So I'm actually going to find another one because I just don't care for that. So we'll find one more, just looking for red candles. And here we go. They're not hard to find. When you're red, you just buy. That's it. When they're green, you sell. Too easy. Here's one right here. They're a dime a dozen. Okay, so we see here, prior day, red. What's my bias? Long, but only if it goes below the prior day low. Same thing over and over. We check our times. Now this one is a little bit of an advanced strategy, but I'm going to go over it for the sake of discussion. There's an idea called the money candle of the London low. All right, so this is what that is. The low of the day money candle is right here. Okay, during Asia. I do not trade Asia. Okay, so we missed this trade. How do we still capitalize on this? What you can do is between the hours of 2 a.m. and 5 a.m., this is the London session. This is what we consider the London session. Which one of these candles, let's make this a little bigger, created the low of the London session? It was this one. Where did price close above this money candle? It was the very next 15 minutes. Right there. It's just a morning star, okay? 1, 2, 3, morning star, okay? For those familiar with candlestick patterns, all right? So this can be your entry right here. Okay, let's take it one step further. If we go down to a 5-minute chart, which you can do, which one of these candles created the low of London? Right here. Which candle broke it? Right here at 4 o'clock a.m. Stop loss goes below the low of the money candle for that session. I'll just do a 25.50 because, oh wait, that's short. Let me fix that to be long. Okay, entry right here, 4 o'clock. Once that money candle breaks, we're in. Okay, there we go. Stop loss below the candle that made the low. Again, this is because the low of the day was made in Asia. I don't trade Asia. My highest probability trades are in London between 2 and 5. That's just what it is. Can they happen at other times? Yes. But that's where the odds are the greatest. Okay, easy 50 pips right there. You were only in this trade for a few minutes, from 4 to about 5:30. Hour and a half, 50 pips. You know, name your price. That could be $100, it could be $1,000, it could be $10,000, depending on how big your lot size is. If you want to scale in, you do that. You know, add on where you can. Maybe take another trade here. Maybe take another one right here. You know, obviously use caution. But the point is this. Once you identify the money candle and price breaks above it, you're looking for a straight rise. This is what you're looking for right here, in line with your daily bias. Because the prior day we saw a red candle. That's it. Okay, so let's get rid of these drawings, go back to the daily. So here it is, once again. Okay, right there. Very simple. If I see red, I'm going long below the prior day low. If I see green, I'm going short above the prior day high. That's your daily bias. That's all you need. You know, you can go through the pairs. And again, but you have to be patient and wait. If the trade doesn't play out, then there's just no trade there. If it doesn't go above the high or below the low, there's no trade there. And that's fine. It's more than okay. Okay, because here's one right here. But see how we're short right here, but price never went above the high right here. Okay, sometimes you'll have equal highs, and that's just how it'll happen. And you'll see, man, I missed this trade. Does that mean you should try to start trading stuff like this though? I wouldn't, because it makes it, you open yourself up to more risk is my point. Okay, so I like high probability stuff. I like this. This is a better range to me right here because it did what I'm looking for. Below the low, it goes up. Okay, if it can't go above this high, I'm looking for a pair that does. Okay, so again, I appreciate your time and attention. Thank you so much for watching. For other great training and tips, definitely take a look at the links in the description of this video or take a look at the other videos on this channel. And I appreciate you guys watching. Don't forget to like, subscribe, and have a great rest of your day.